Hello, everyone. I'm Joe Welu. Thanks so much for tuning in to Expert Insights, where we talk with industry leaders across modern financial services to discuss leadership and innovation. Let's get started. All right, guys, welcome back. Joined again by Mr. Dan Catinella, our Chief Lending Officer, with part 2 of our Maximizing Growth series. And just to give everybody some context, we wanted to share with the audience some of the strategic conversations that we have internally with our partners, our customers, on ways to unlock growth opportunities in this market, in this environment. And we, have the opportunity to see what's working and what's not working, and wanted to share some best practices around that. What we're going to talk about today is doubling down on customer loyalty and becoming a customer for life company, a customer for life practitioner, originator, whatever your title is, becoming a truly focused on building lifelong relationships. And what does that mean for the business? We in software, in SaaS, as we call it internally, everybody talks all the time about lifetime value of the customer. How many times have you heard lenders, banks, organizations use the word lifetime value of a customer?
A lot. Now the trick is how do you execute on that? We know the cheapest customer to acquire is the one you already have. So how can you make sure that you're serving them in every opportunity that you have?
So for some perspective, I agree with you. People are starting to, all of a sudden, it's one of the most important initiatives is, wait a second, the thing that's really long-term, that's sustainable in any market is really strong loyalty of your past customers, because ultimately once that database of customers, past customers, gets large enough, no matter what's going on, it's going to be a growth engine for you, right? And so for some perspective, why did it take people so long? I guess that's my question in lending, to start thinking about customer lifetime value as a strategic pillar.
Well, I think we obviously know what happened 2 years prior with deals falling from the sky. I think it always takes a bad market for organizations to realize how to really succeed over the long haul. And when I have conversations with originators today, whether they're struggling or they're winning in some capacity, one of the questions I ask them is, do you view your database as an appreciating asset? Because
I love that question.
I believe every originator should view their database as an appreciating asset if they're treating it correctly with today's technology.
That's such a powerful statement. Let's unpack that a little bit. So the opposite of appreciating is depreciating, right? So if I think about it, if you don't do the things to take care of those past customers, stay engaging, your value just diminishes, right? That's what you're saying, essentially. Am I correct?
Absolutely. Listen, if you look at a first-time home buyer today, which makes up the majority of the purchase business entering this year, and looks like it's going to continue through this year, a first-time home buyer, you should be looking at it at that first-time home buyer at about 10 transactions.
It's interesting you say that, because so many other industries, if you think about, the legal profession or dentists and doctors, accountants, really the value of their businesses over time is the size of their customer book, right?
Mm-hmm.
Yet in lending, it's always been so transactional because the money's fairly significant at that transaction, and it's always been next deal, next deal, next deal. And now we're in this environment where customer for life, you're thinking about, and if you're smart, you're doing an audit of your database, and you're saying, oh, how many opportunities did I miss over the last 12, 24 months because I didn't communicate, I didn't have any insights to tell me what's happening. Correct? Am I thinking about that correctly?
Absolutely. I mean, we know the industry, our industry as a whole, has a pretty abysmal and embarrassing 22% customer retention rate. And I think there's a lot of people that when they're looking at some of these highly marketing consumer direct engines that have been built in this kind of fintech era, I think they're realizing that in order to compete with those massive marketing engines, they need to play in the same game in some capacity.
So I want to start as a company. I want to start really getting serious and doubling down on my customer database, becoming a customer for life organization, driving growth with loyalty. Where do I start? So here's how I think about it based on my perspective, but obviously you have so much depth in the execution side of this having worked at large lenders for 20 years and put different strategies in place. I think about it like step one is I need to look at my database and ask, do I have things in place to help me understand what's going on in the world of that customer? And we talk a lot about customer intelligence as a framework, as a concept of really deeply understanding the needs of each customer and then being able to anticipate what's important to them so that I can be there for every financial milestone, right? So step one, what kind of intelligence do I have to help me understand what's happening? Is that a step one in your mind?
Absolutely. I mean, the more data that you can feed into your database to understand the customer at a very deep level, and not just what it was at the last transaction, but the most important thing is how do you keep your database as a continuing to mature and evolve and continue to use third-party data sources to really understand what is that consumer situation today, not 3 years ago when I completed the last transaction. So, and our goal at Total Expert is really to continue to build this most comprehensive financial profile in our system for every customer that exists in there, so that I now know how I can best serve them for the next opportunity based on how their life has changed from the last transaction I did.
Yeah, and that's absolutely the bullseye of what we talk about probably almost every single day. But I want to draw some contrast because the opposite of that, which is kind of how historically the industry has ran, and sort of the word quote unquote CRM, which we kind of both agree is really an outdated word and an outdated framework, is I have customer data. Maybe it's in a spreadsheet. Maybe it's just in the system, in a CRM system somewhere, and it's static, right? It's just kind of whatever happened at the last transaction. That's my view. And it's not dynamic. It's not changing. But yet the customer, which is what this is all about, their world's changing all the time, right? Their needs, their family, their financial situation. Like that's what you're talking about when you're saying, hey, comprehensive profile, right?
Absolutely. I mean, there's so many things that occur in somebody's life. Maybe they had a massive increase in, high interest debt, but they got a ton of equity in their home. Maybe they just turned 62 and, you should be educating them about a reverse mortgage. Maybe they got an ARM loan last year when interest rates were skyrocketed, and in 3 years, you're going to need to re-engage them at the right time. So there's so many different aspects of understanding that consumer, and as their life and events and their financial profile changes, to make sure that you're constantly engaging them with the most relevant content, and really surfacing those opportunities to the originators to re-engage, face to face with meaningful conversations at the right time with the right message and in the right channel that they choose, whether that's email, SMS, or face to face or phone call.
Yeah, that's so well said. And based on what you're saying, right, it's like if you have that comprehensive profile, and as an organization, if you really want to go big on loyalty, you have to figure out a way to continue to enhance and enrich those profiles so that you can unlock all that opportunity, and then that rolls up into your sort of your channels of engagement, right, which is what you're just talking about, and that
Absolutely.
might be also, that's a part of that profile too, right?
Absolutely.
I was with the product team yesterday, and you are involved in a lot of these conversations, product and engineering team, and we're talking about all of the work that's happening. And one of the things that is really consistently coming up as a priority. And we do this today, but a lot of our customers are trying to take these things to the next level is how do we capture at a macro level, at an enterprise level, the preferences for each customer, the consent, right? My communication channels that I want, right? Some people are like me, I don't really like getting a lot of phone calls. I prefer to text and then set up a phone call, right? Like those types of preferences, right? So that's part of it. Is that part of it?
Absolutely. And we know, even just I'll use another example to layer on top of it, but it could even be language as well. I mean, we have the Hispanic community that's growing at an astronomical rate. And, with some of these limited English proficiencies regulations coming out, we need to make sure that we're prepared to communicate with consumers in the language that they choose as well. Spanish, obviously, leading that charge.
We've seen such an impact we started, I think maybe 2 years ago now, maybe a little bit more, started working with some of our customers to get content in other languages. And the difference, I didn't really think about that, right, as how important it is. But when we think about expanding, and another topic that we're both passionate about is believing in expanding the home ownership gap, right? Or decreasing the home ownership gap and expanding the amount of Americans that can get a home, right?
Absolutely.
And so that content component feeds into that as well and goes into their preference.
Everybody should have access to high quality educational content to become mortgage readiness, and that that needs to be consumed no matter what language you speak within America.
Yeah, no, it's so well said. I mean, it's shocking when you really look at it how terrible as an industry we've done collectively. There's some organizations that I think execute on this really well, but collectively as an industry, how poorly we've done on educating consumers throughout. In some cases, it's educating them on the next transaction as well, or helping them understand how a second home or an investment property can build wealth. Like, it's been so transactional. So that customer for life strategy, really maximizing that loyalty, really encompasses all of those things that we just talked about. So, well, thanks for the time today, man. I know you're still reeling from your loss with your your Eagles on Sunday. So
it was a tough one. It was a tough one, but we got further than anybody thought, and we'll be back next year.
Yeah, maybe. I don't know. There's a lot of people that think otherwise, but hey, we'll save that conversation for another day. So thanks, man, for your perspective. In closing, right, as far as best practices for maximizing growth this year, doubling down on customer loyalty, becoming a customer for life company, and then prioritizing some very strategic things that can make that happen, right? Having intelligence in place to understand the past customers and what's happening, having the right types of content and educational communication in place, right? And then systematizing it, right, in an organization and automating as much as you can. And that can absolutely unlock a lot of growth. And look forward to continuing the next conversation on some of these best practices, Dan. Talk soon.
Yep. Sounds great. Let's turn every originator's database into an appreciating asset.
Yes, I love that. Appreciating asset, not depreciating. Realize how valuable that database is. So well said, buddy. Thanks so much for joining us today. Be sure to subscribe wherever you get your podcasts.